has been running.
Thank you very much for joining us right here on Business Insight tonight. My name is Ronald Willie and you're just in time for the Trading Bell, the show that gives you all the information about the markets. Tonight, we talk about M-Akiba, which is now listed right here on the Nairobi Securities Exchange. And joining me later on will be a panel to discuss more about this particular government paper. Trading Bell continues right here on Channel 1. My name is Ronald Owili, and this week it has been big for M-Akiba. That is the government mobile-based security launched a few weeks ago, but has since been closed on the initial tranche, which is 150 million shillings, I beg your pardon. And joining me on set now is Rose Mambo, CEO, CDSC. And then we have Wahoro Nduru, Director General of Public Debt Management Office at the National Treasury. And of course, frequent guest here, Jeffrey Dundo, CEO, NSC, and Luke Umbara, Director of Regulations and Policy at the CMA. Let's begin with you, DG. Do you feel like this M-Akiba sort of innovation came way too late, looking at the subscriptions, of course?
No. My short answer is it came at exactly the right time. There's a development process that we've gone through. Clearly, when we could have launched it earlier, but there are reasons for why it wasn't done. But by judging by everything from the maturing of our technology to the ability of Kenyans to anticipate it, now that we've launched it, the response has been overwhelming and clearly a clear signal that the timing could have been better. Yeah, perfect timing.
But looking at the special limited offer, which was oversubscribed, what do you make of that?
Well, a special limited offer was actually a good indicator. I think it gave us a taste or a foretaste of Kenya's appetite to embrace a new form of savings. And so the special limited offer did exactly what we expected it to do. It gave us an idea of what the appetite for Kenyans to buy the M-Akiba Bond, but more importantly, it gave us opportunity to then learn the lessons we need for the main launch. And so in the next 3-4 weeks, we will be internalizing all that data that we've collected to make sure that we perfect the process by which we'll launch the main Akiba in June.
Let's go to you, Mambo. Looking at all those figures, where specifically were investors looking at the first tranche? What majority of investors, where were they from?
The majority of the investors, in terms of the value of their investment, were between 3,000 Kenya shillings and 20,000 Kenya shillings. In that range, we had about 75% of the investors, and then 25% invested above 20,000 shillings. So I think we've really hit our target market, who was your ordinary Kenyan from all walks of life, who has been able to participate in the initial tranche.
But do you think Wanjiku, that specifically this bond is targeting, is there real participation per se?
There is real participation from Wanjiku, because if you look at just the people who bought the bare minimum of 3,000 Kenya shillings, they were actually 30% of the investors. And those who bought between 3,000 and 10,000 shillings were another 31%. And then up to 20,000 were about 10%. So I think we have captured the real Wanjiku.
Was 150 million sort of a low target, would you say?
I think it was good for a pilot, because you're also testing people's understanding of the product, people's appetite for the product. And I think just to demonstrate how much interest there is, we had about 108,000 people actually opening CDS accounts. The number of people who actually bought were 5,200. So I think there's a lot of interest. It's now, the onus is now upon us to go out there and educate people, give them a lot more information about what the product is about, so that we convert that 108,000 into actual investors and even register up to millions.
So are you worried about, the awareness, looking at the number of people who bought it? You say 5% there?
Yes. Actually, because it was a special and limited offer, we haven't gone all out with our investor education, with our roadshows. So for the main bond, we actually have a very intensive program to go all around the country, giving people information and investor education, and facilitating and ensuring that as many people have as much information as possible about M-Akiba.
Right. Jeffrey, what does this mean for the market?
It basically demonstrates that there is real appetite for investments. Kenyans have been looking for a channel to go into government paper, and just seeing the sheer number of registrations, a lot of which were done without a lot of what I call query. We do not see a lot of query on our call center. It just demonstrates Kenyans are very knowledgeable in using their devices. So the ability for Kenyans to apply for this bond and now be able to have a channel to trade, I think will deepen the capital markets. We're actually bringing on board 108,000 potentially new investors into the capital markets, and that's really a great benefit. It will allow us to educate them, also build the understanding of other products that will come in. So I think this is the first of many, and as Rosa said, ideally the retail market has been missing for quite a while, and this is now really good to bring them on board. And probably they've been waiting for a channel to access the market in a very easy way.
It is officially traded now. Would you kindly tell us more about that?
So today we've launched the listing of the bond on the exchange. So investors who bought the bond in the primary offer can actually be able to sell. Now, what we've done in the whole product framework, we have put in place a liquidity provider in the middle who will provide an automatic exit for anybody who wants to sell their bond. But that notwithstanding, we would like to guide investors that really selling bond today, you're really not making the money, because today is really the first day you're getting your interest for one day. So it makes sense to sell at probably a later stage. But the whole intention of M-Akiba is to enable you save. But we are very alive to the fact that circumstances can demand that you sell. And so we have put in place a liquidity provider in the middle to allow you to sell.
Let's talk about regulation. They're giving very enticing figures, 10% return. From a regulation point of view, do you think that there's that openness in terms of risks tied to this particular point?
Okay, I would say our job really as the regulator would be to make sure there's sufficient access by everyone. Also the infrastructure providers. We have the MNOs, or the mobile network operators. Our job is really to make sure that we don't have just one provider, so that we have equal access for all. We have also, as I talked about Section 12A, our big concern as a regulator is risk management. What they have been able to address around, it ranges from the system itself, if there are going to be issues of access at onboarding stage, there's going to be issue of access at payment stage, liquidity provision stage, if there are going to be downtimes, because there could have been, as was said, a few teething problems. Perhaps we could have had more buying the product if they were able to access it fully up to the end. So ours is really to look at, and the onus really is on them, all the stakeholders, to assure us as the regulator that they have identified all the risks. There are emerging risks that will keep coming in because there's a new product, but they have to move with the time and keep notifying and updating us on the mitigation measures that they will have taken. So ours is basically around risk management, also the issue of protection of the client's funds. That is very, very key to us as the regulator. But we also foresee it from a macro perspective, because as you know, we have both a regulatory and development mandate. So looking at our role in the Vision 2030, we are required to facilitate mobilization of savings. Jeff talked about 12%. The vision talks about 28 to 30%
In
to
fact,
be
even
able.
Rwanda and
Yeah.
Uganda doing better in terms
Yes.
of savings.
Yes. So with just this pilot, if we're able to get 100,000 interested parties, you can imagine with 4.85 billion, if you tried to forecast, then we are going to start rethinking seriously about whether we're able to achieve our 30% savings rate required.
Okay.
It is a prerequisite to get 30% savings to be able to achieve 10% GDP growth. That will lead us to a middle level economy. So besides the regulatory part where we are making sure there's transparency, there's accountability, there's risk management, we also have the developmental role, because you can only regulate a market that exists.
Fantastic. But as we come to the end, we are going to the second tranche is going to be launched in June, I believe, 4.85 billion shillings. Going forward, what do you make of, how the bond will perform?
I'm very optimistic. One of the things that is very interesting from my colleague here from CMA was mentioning, it's always important to keep our eye on the ball. And the big ball is get Kenyans to invest in their country. No country has developed, no country has moved from poverty to wealth without investing heavily in its infrastructure. I don't know what you were born, but in the year I was born, up in the highlands, if you are going
Another
to take,
discussion.
if you are going to take your milk from your house to KCC,
All right.
some of us would have to go and wait on the road, get on a donkey. Actually, a donkey was quite innovative in those days. Take a donkey and take maybe 3 hours to get to the dairy. Now the same road is tarmacked. And now we are having the likes of Brookside and KCC coming with their vehicles. And they are very, very time conscious. You must be outside your gate at 5:07. Because at 5:09 he's at your neighbor's, so you have to run after the truck. So investing in a good road meant that you cut the 3 hours to 5 minutes for your milk to be picked.
Right.
So no country can develop without a first-class infrastructure. And yes, it's heavy. It looks like you're borrowing a lot, but you ask the people who have benefited from that, especially Mashinani. And so the purpose of increasing that investment means you must participate. You must always look for new sources of revenue, of savings. And now we're asking Kenyans to say, if you put your money in a bond like this, and then we improve your road network, then you're able to do business more easily, and then you're able to become wealthier because you're not having to wait or walk 3 hours to do your business.
Okay.
That's what the essence of economic growth is about. And M-Akiba is the first opportunity we are giving the average Kenyan to participate in what only banks and rich people have been able to do, which is an infrastructure bond that gives you 10%, gives you a tax-free income, and at the end of that, after 3 years, returns your money to you. Tell me which
And
are
the best
investments
thing
of
about
that.
it is simplicity, given that it's very mobile.
That is correct. And that is by far the greatest thing. That unlike in the past when you'd have to go and still fill in forms, then get your grandmother's uncle to certify that you are who you say you are. Now we have a situation where you can, on your mobile phone, register with the government. Just your ID. That's all you need, is your ID.
Right.
And we'll do all the checks in the background, but once you verify who you say you are, you can buy a bond. And I would even encourage you, for those of you who are salaried, see this as every month you buy a 3,000 shilling M-Akiba. Every month you buy another bond. And every time you buy, you're buying future income, because the interest on that bond will surprise you one day when you start paying your interest by your mobile phone.
Hoping they don't sell early. Mambo, before June, what sort of work are you going to engage in so that you attract retail buyers?
We've had an opportunity through the pilot to collect quite a bit of data about investor behavior, about our own systems behavior, our own interaction as partners within this product. And I think it will now be to capitalize on the lessons learned. Like I said, a lot of investor education, a lot of promotion and marketing activities are going to be undertaken. And so for us, this period up to June is going to be very busy, just ensuring that we are able to get all the information out there that we need to, so that once the bond is launched, launched, we actually see people investing in it.
But is there a chance to maybe reduce the minimum investment?
At 3,000, I think it is quite low, and the feedback we've gotten from the people who have invested is that 3,000 is actually a very reasonable entry point. Yeah.
Jeffrey, tell us as we go to the June, as NEC, how you prepare to handle that kind of investments.
Yeah, so between now and June, we are working to analyze the data we've received.
Okay.
What does it tell us? We'll definitely be improving our platform to make it more available. You can imagine this was a very generic infrastructure. We really developed it ourselves. I must say that it has performed extremely well. So it'll be about improving the system efficiencies. We are looking at, well, it's an open platform, so other MNOs who might be interested to come on board, we'll also be inviting them. Really, so it's more about studying the data, seeing how the trading goes, if there are any issues on the secondary trading. A lot of investment in public education. We have to inform the public and just keep that alive, that conversation. So there'll be a lot of work going on in the background because we have the big launch coming, and this being a very long-term program, we must just continuously invest in the infrastructure and the framework that we've set up.
Right. Yeah. And finally, from Umbara,
Okay.
from looking at regulations, this is a new innovation, and I'm sure a lot will continue coming from this particular sector going forward.
Yeah, we are looking forward to now that government has set precedent. Normally, government is very conservative on the area of fintech. We expect very many from the private sector to come in, particularly in the area of financial technology solutions. Specifically, we have interest from those who want approvals for us to provide crowd funding platforms. But on M-Akiba itself, we want to make sure that there's sufficient disclosure on regulatory costs. There's just all the risk issues are continuously reported to the regulator, and we're able to sign off. We want to look at whether SLA or service level agreements are being complied with. We are just going to do what we need to do as a regulator, just to make sure there's level playing field, there's market confidence.
And trust.
Yeah, exactly.
Yeah. Awesome. Thank you. Rose from CDS, C, Jeffrey, and Umbara.
Thank you.
If you missed on the first M-Akiba, then you have a chance to buy now, since it is now on the NSE. My name is Ronald Willie. Thank you very much for watching Trading Bell. And now that you are aware of that particular historical fact about the NSE, Here on Trading Bell, we always appreciate your feedback, and on Facebook, you can get us at The Trading Bell TV Show, and on Twitter, it is at The Trading Bell. SMS line is also open, and you start with the word BIZ to 22162. I am at Ronald Owidi. Thank you very much for watching.